Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and KYC is the show where we get you one of the hottest companies where the people discuss, is there any alpha to be made or not? We get for you mid caps, small caps, and a whole list of other stocks from the universe. But today there is a very interesting company. Guess करके बताइए ये कौन सा company है? मैं आपको थोड़ा hints देता हूँ. First hint, it's a Pune-based technical textiles company. I'm sure you know the name, but there are a lot of these group companies which are listed, more than 4 or 5 I think. It was established in the year 1976. One more hint for you, and that is the stock is up 31% from March lows. And the last hint, try to guess it, I'm sure you are very near to it. It supplies sport nets to Wimbledon. Wow, that's an interesting fact. Try to understand which company I'm talking about. I'm sure the first name you must have guessed by now, and the confusion might be there in the second name. It's of course Garware Group company. It's Garware Technical Fibers. But why are we calling this technical textiles company? क्या बात है इसमें? First question definitely is going to be on the overall business outlook and the benefits from UK-FTA. That is why we are getting in the textile companies and also the technical textiles. That's the story we should be looking out for. The demand trends and the client confidence. What does that suggest? Is there any volatility at play from the abroad clients? The pricing power of the company, more price hikes, will that be taken? It's an old company. They have a very good name in the markets, and that's why the pricing power comes in. Inventory levels, will it be on the higher side as per what the customers have requested? That's the key question to be asked, especially in the first quarter. Middle East issue, is there a delay in the domestic dealer offtake? That's also we'll try to understand. And of course, some problems are there in the industry, but in that case also the market share picture, does it maintain it? And if it maintains it, it's a benefit of consolidation comes in at play. And this is very interesting geosynthetic business. And I'll try to make you understand also that this is a quite technical company, but very simplified way we'll explain it. We'll have Shujaul Rehman. He's the CEO at Garware Technical Fibers to give us the entire viewpoint and the outlook for the business and the industry ahead. चलिए अब कंपनी के बारे में बात करते हैं. Let's try to understand about the company, the key details, what you should be knowing about. Of course, this is a technical textiles company from Pune, established in the year 1976. A lot of collaborations have happened. I see the history in the company's website. Now they have applied in sports, fisheries, aquaculture. They provide high tensile nets, ropes, and ancillaries. It is a little bit off technical, but I'll simplify it for you. Shipping, agriculture coated fabrics, and geosynthetics. Basically, geosynthetic is nothing but the slope wires which are there so that the rocks don't fall, and of course across various different types of lands. Also, let's move on and understand a little bit more about the company. They have, of course, 2 facilities, in Vai and Pune, largely Maharashtra-based company. And also, most of the manufacturing setups and ancillaries are here itself, but they are marketed in more than 75 countries. Company mein R&D is very strong, and that is why they have a good pricing power. I'll give you a lot of details about the positives of the company, but you need to hold on. You need to wait a little bit. They have almost 101 patents filed and 29 granted. That is where they get that global exposure. 20,000 SKUs are there, which is pretty impressive when it comes to different categories. Now, speaking of categories, let's try to decode. लेकिन ये company बनाती क्या है? That's of course markets also at times don't understand that, but we'll try to simplify it for you. Aquaculture. There are cages, mooring ropes, and netting solutions, and this is very much important, especially for salmon fishing and also different types of fishings, and all these ecosystem products, high margin products the company makes. So this is a niche category product and a niche industry. Sports nets business, they have tennis, football, baseball. The nets which we see for the baseball, of course the goalkeeping nets we talk about, and of course the tennis, they supply to Wimbledon, Roland Garros, you name it. It's an Indian brand which is hidden in plain sight of the global events, especially in the sports. So that's a proud moment as well. But value added, niche bhi hai, value added products bhi hai. They have ropes, fabricated slings, and high strength polyfins. Of course, the applications are across various industries. Third important product is geosynthetics. That's where the company has stated the growth is coming faster This is nothing but the slope protection, especially in road, railways, airports and ports. This is very much, you could say a very strong kind of a product so that the rocks don't fall in case of tunnels. But enough of the products. Let's try to understand where's the revenue coming from. Of course, domestic revenues are slightly lower. It's roughly 40%. But look at that, the international exposure, that is where the street is quite bullish on. 60% of this revenue is coming from this segment. So this is the overall revenue breakup I would like to point out for the company. But the question remains is, what are the positive factors for Garware Technical Fibers? What may work for the company? The first one, it's debt-free and the company is having a strong pricing power. यानी कि raw material price अगर ज़्यादा बढ़ा है तो company जो है price hike कर सकती है. They command a good bargaining power in the industry they work in. A high return ratio industry, of course, compare that with technical textile and a normal textile. If you get them together, that's what we see the company has a better alpha. Strong commentary has come in from the management, especially for the new product rollout. They have a good R&D setup also, and they're always looking out for niche products. So that is how you build a moat across the decades of your existence. And interestingly, I have found the valuations attractive also because of the volatility seen in the export business. Also, the government is pushing really hard for technical textiles. This is a very important point. So you should note it down if you are a budding analyst. These are something you should be looking out for. But not everything is rosy, and that is why at KYC we get in the both sides of the coin to give you a very balanced outlook. What may not work for the company? The inventory levels, they might remain higher in the first quarter. The customers have also said, hold on to your inventories. There is a lot of volatility, and because of that, adjustments, especially on the accounting, can be there. There's a very less analyst coverage. I just checked, only 2 analysts from domestic broking houses are tracking it. So definitely there needs to be more product discovery, and the markets also haven't actually factored in, the strength which the company has. So it might be having a little bit of valuations when it comes to a normal textile company. So we need to get that in KYC, that by technical textile and normal textile, polyester and cotton are different things. But the KYC ratings is not different. We always have a proper format for it. This includes income statement, balance sheet, cash flow, return ratios. We see what's happening with the business. Also the shareholding, how that pattern has moved around, street cred, different timelines. We try to understand, has this company made money for you or not? Valuations, interestingly, the company doesn't have much peers, so I'm going to compare that with the only valuations front for the company itself. And of course, we have outlook also. That's one of the most important rating to track. The first one, let's get in, is of course the income statement. Income statement, it is dismal. Why? Of course, the numbers are strong, but is it growing or not? And if it doesn't grow, the street won't reward. And this is what's happening. Single digit growth aa raha hai aapka revenue, EBITDA, PAT mein. So that is where a little bit of concern comes in. And if we pull up the Q4 numbers also, largely it was a mixed set of numbers. And that is where a little bit of concern comes in, because the numbers have to follow. If the number follows, the EPS goes up, of course, the market gives you a value, despite of being in a niche business or a category. And largely margins were stable, a slight dip coming from FY24, FY25, it was 20% plus, and then it's slightly going down to 19%. So no much variation. It's a very stable business model, but the street needs growth. That is why I'm going to give this a thumbs down when it comes to the income statement. Now let's move on to the balance sheet and see what's the story here. Largely, it's debt-free. That's a very good point. At times, people call it conservative thought process, but nevertheless, if the balance sheet is maintained, it's a good sign for the future moves. Reserves are pretty decent. Cash balances have also gone up, and largely it is maintained very nicely. So I'm going to give this a strong thumbs up. So we spoke about the income statement, we spoke about the balance sheet, but come over, let's try to understand the cash flow segment, what has happened, and the company has been able to, for the FY26 numbers at least, has been pretty decent, a good conversion, and this is the rate to look at. That's roughly 81%, and the net cash flows is decent. It's at 73 odd crore rupees, but nevertheless, it's a strong way of keeping the working capital ratios in check. So there is a little bit of conservatism at play, but it benefits also, especially for the analysis which we do on a backdated basis. That is why I'm going to give this a strong thumbs up to the cash flow segment. So after these three ratings, we come to the ROC numbers. And this is where if you compare that with a normal textile company, which might be commoditized, even though it's going through a structural change, look at that. This has been maintaining 20% plus ROCs for textile company. And remember, it's a technical textile company at play. So I'm going to give this a strong thumbs up when it comes to the return ratios. Apart from return ratios, it literally looks like a mirror image. March 2024 का shareholding pattern देखिए, promoters, FIs, DIs और public, कुछ नहीं बदला 3 साल में. Look at that. This has been pretty much same, no major changes happening. So all the shareholders are holding. Nobody's selling a lot, nobody is buying a lot. So we need to wait and watch. So as of now, it's a neutral rating when it comes to the overall shareholding. But let's talk about the street cred. Has the company made money for the investors or the traders? That's the key question. So I pick up 4 important data points. From March lows, like everyone else, most of them, companies trying to do a recovery, the stock went up 31%. But still, what peak numbers we saw in 2025, that is still, it's down almost 19%. अगर एक साल की बात करें तो stock जो है 9% जो है गिरा हुआ है. But the biggest complaint, if you're holding it for the long-term investor, for the last 5 years, the stock hasn't done much. Only 20% return has come in. And that is where a little bit of concern starts coming in. So definitely we'll try to understand more about it, but that's of course the next rating. It's a negative right now over the valuations, because stock में इतनी गिरावट आई है और of course earnings भी largely flattish रहा है. The valuations have turned attractive. The current valuation, this is the 12-month forward P, comes in at 31 times. And if you have a peak valuations, that came in at 46 times. And that 5-year average, if I talk about it, that comes under almost 30 times. But if you analyze that totally, the valuations are cheap. Now, if the valuations are cheap, I'm going to give this a strong thumbs up. So 7 ratings are done. Let's talk about the 8th rating, and that's of course the outlook, what the company is going forward. This is very much important. Improved visibility is coming in the salmon aquaculture business, so that's pretty much interesting, where the nets are being, the demand for the nets are picking up. USA sports nets business, those orders are coming at high rates. The market share has been maintained. Company has stated that in the 4th quarter's presentation. The value-added ropes business, of course, there was an acquisition, and the company claims that the ROC and the EPS numbers are accretive. We need to understand by when this integration comes in. That's the key question. And also the high growth rates. This is a geosynthetic business. We call it the slow protection. That is where a bullish commentary is coming in. But in short term, there are inventory adjustments. Raw material costing का जो impact था Middle East से वो भी आने वाला है. So a lot of short term volatility would be there at least for the next 1 to 2 odd quarters. But let's see how the company comes up from this bad situation. So it's a neutral rating, I would say, when it comes to the outlook. But apart from the outlook, let's try to understand कि KYC rating के report card में company को कितना मिला है. This is an important data to check. So we revise that. Concerns on the growth, revenue, PAT, EBITDA, but balance sheet cash flow management is pretty strong. And for a company in technical textile, getting a good return ratios and maintaining it for so many years is a good sign. Shareholding, nothing has changed. Street cred, however, despite having niche business, a decent ROC numbers, it hasn't made a lot of money for the investors. So last 5 years, just 20%. Valuations, that's why it becomes quite attractive. Long-term outlook is strong, but of course the short-term outlook, there will be volatility. So the total KYC rating for Garware Technical Fibers comes in at roughly 5 out of 8. It's largely neutral to slight positive when it comes to our average rates which we give, or the average ratings which we give in KYC show. But we'll try to understand the entire story, and of course we'll get in from Shujaul Rehman. He's the CEO of the company, but there's some interesting tidbits about him. He has held leadership roles from Seat, Mondelez, Marico, Apollo Tyres, so he has seen a lot of corporates and different segments as well. He's the chairman of Pune zone at CII as well. That's a prestigious position. And also education coming in from Harvard Business School and Aligarh Muslim University. So pretty interesting, history coming in from Shujaul. But just to get everything in perspective, let's ask the first question itself. getting him with us. And Shujaul, the first question I would like to ask you, especially, first of all,
Hi, sure.
good afternoon, and it's always a
Good
pleasure to
afternoon to you.
have you at NDTV Profit. Is the business sentiment? How is the business sentiment looking like, especially with so much volatility in your export business right now?
Thank you, Sharath, and thanks for having us on the show. I think the last 3, 4 months we have seen the Iran war and the play out of that. For us, the impact was on raw material. It in fact increased by about almost 70% in 12, 13 days. Fortunately for us, we are a company which is in the value-added segment, and our products are innovative, and many of the products have patents. So we are able to pass through the raw material hikes to our customers. Obviously, there is a lag. As we speak, what happened was in the month of March and April, we had concerns about raw material availability. So, we were able to stock up raw material, and you would see in the March balance sheet also that there's stocking up in raw material. And that's the reason why you mentioned a while back that the inventory has increased. Another reason for us where inventory increase was due to the transit. What happened was in March, many of the material was to reach to our subsidiaries in Norway or in Chile, which obviously are 60 to 75 days transit from India. They couldn't reach because of this geopolitical issue, and obviously inventory, which is GIT, also increased, which was basically confirmed orders. So that was the impact we had last year. This year, so far, as we speak, things are looking okay. Raw material is still holding on; it's not dropped. Supply is, as of now, not a concern of raw material. Many of the orders which we were expecting have also come, and things are looking good for quarter at this stage.
Right. That means the supply chain issues have normalized going ahead. And also, if you look at it, the way the momentum is building up for the value-added products, you also deal in the niche segment. That is where a little bit of strength also lies. But I want to ask another angle to it. Recently, of course, the India-UK FTA was completed. And a lot of new industry opens up for your company also regarding the products which you have been talking about. Shujaul, I just want to understand, what incremental benefits can come in for Garware Technical Fibers.
Actually, when the FTA was announced, a few 5 days back, I was in UK only, and we met some customers. So obviously, there's a benefit for us. There'll be some duty impact benefit which will be there for us, but the bigger benefit will be for our customers. Scottish salmon is a big salmon species, and it's a very profitable and a very premium segment for our customers. They want to sell it in India, and this opens a door for them. And in fact, they came and visited our facility and also met some customers, their customers. So it's actually win-win for both of us. From our side also, it's positive, and from our customer side also, it's positive. So I think it's a good move.
Fair enough. It's a good move, and hopefully in the coming quarters you can quantify that also for us, because a lot of discovery needs to happen. The street generally doesn't look into detail about technical textile companies like yours, and I feel there is definitely a value here. But speaking of pricing power, there seems to be you are having a good bargaining power on the pricing segment, on the pricing power, and I'm sure the raw material costs have gone up. So by when this calibrated price hikes can start coming in second quarter, or you'll just take it, by the end of the first quarter itself?
No, I think in quarter one itself, price hike impact will be there because we were able to pass through. There is a little bit of a lag because we have orders in the system. Otherwise, mostly in international market, every month we have a price updation list, so it immediately is passed through. Domestic also it's been passed through, so the impact will be felt in Q1, as I mentioned a while back. Being an innovative company, we are able to pass through the raw material increases, and we are able to give value proposition to a customer. That's why they come back to us.
Fair enough, and this is largely known. It's almost, you could say, 60 to 70-year-old brand. But I want to understand a little bit more about the domestic business. The Middle East disruptions, as we're speaking about, I just want to get a little bit more views on this domestic dealer offtakes. Is that delay continuing, or has that bottomed out or improved as we speak right now?
In domestic, we have two parts of business. One is geosynthetic, which is the slope protection infrastructure business, which is doing actually very well. It's been growing at the rate of 40% last 3 years. So that business is still doing very well. There's no impact of West Asia crisis on that business. The pipeline is very positive. On the other side, the domestic business, which is industrial business and fishing business, that business was not doing well last few years, but it has now bounced back in a very big way. The construction business, construction safety business, and other businesses, oil and gas business, all is doing very well. Transmission business is doing very well. So these businesses are doing well. In domestic market, obviously we have a channel through which we serve the customer, which is a dealer and distributor. So when RM increases by such a level, they obviously hold on to their purchases, they don't buy. So there is some lag, but I think now things are settling down. Everybody's understood the impact of this war and the raw material impact. So I think things are going back to normal. In terms of demand side also, I don't see any major impact. One point is that at this point, there is some doubt in everybody's mind in terms of monsoon outlook. So some businesses may get impacted, but we are waiting and seeing the impact of monsoon. So at this stage, I think overall domestic also looking very positive.
So short term, there are some issues, but Shujaul, let's talk a little bit long term, FY28, FY29. The margin outlook, how does it look? It comes back above that 20% mark on a consolidated basis. How does that look? What are the levers for the margins?
So in terms of margin outlook, I think we will be in the 20-21% range. That's our last few years trend. So that if you see our Q4 margin was very good. So we will maintain those kind of margin profile. That's I think the intent, and that's the drive that we are pushing. As far as the outlook is concerned on some of the segments, so if you look at our business, 80% of business comes from value-added products and 20% is still commodity, on which we are working in the rope segment. These are mostly the value-added ropes in oil and gas. They could be in transmission, they could be in shipping and mooring. So that segment is where we are working on to upgrade our customer profile, our product profile, and move to a value-added segment. That may impact positively on our margin, but I think overall margin will remain range bound, so to say, and we'll maintain the 20-21% margin.
And also there is a little bit of concern, especially from the long-term investors. Okay, fine, margins remain stable. What about the top line growth? Last 3 years, it's been largely single digit on the CAGR basis. So of course, the top line growth is also something which the street wants to know more about for your company. Any kind of, targets which you have set, if 3-year target or a 5-year target, which you'd like to share?
As a company, we focus on bottom line. Our aspiration is to double our profit every 5 years. And we are well on track, at least in F27, to be able to achieve that objective of doubling our profit in 5 years. So you can assume our bottom line growth at about mid 15% or around 15% level. As far as the impact of last year is concerned, if you see, last year was not a great year for us. There were 2-3 big impacts toward the end. I spoke about the supply chain issues, but also around Q2 time, what happened, normally salmon farming, which is like 80% of salmon which is consumed in the world is farmed. Salmon farming takes about 12 to 14 months for a salmon to be produced in the fish in the water. For some reason, this cycle was reduced by about 1 month, 1 to 2 months, about 4 to 6 weeks, so to say, which essentially meant more salmon in the market, and which impacted the salmon prices. And our customers, in a way, cut down on their capexes, which impacted us in a big way in Q2. But that situation is now resolved, and the last quarter orders were there, which I think we were able to produce and execute, but we couldn't get the sales. And so that impacted F26 in a big way. But also you would also appreciate that 10% of profit comes from USA, where our sports business is a very big segment, which also got impacted last year for about 6 to 7 months due to overall 50-55% tariff.
We were able to hold on to, right. On your US business for the nets, right now the FIFA World Cup is going on. Just out of curiosity, are the football nets being made by your company?
We don't know, because we normally supply to our distributors. Okay. So I would say there's high probability it could be our net, but we don't know, because we don't sell it as a branded product. We sell it as a catalog product and supply to our distributors who sell it eventually.
Fair enough. It's wonderful to have a chat with you. And it's always a pleasure, Shujaul, to be with us at NDTV Profit. Best of luck for your company and the future. So that's a very interesting take coming in from the management. But yes, there are problems, there are inventory issues, and it's going to take some time, especially on the demand front. But a very interesting company, right? So for all these interesting stories on these companies, keep watching KYC. And yes, stay tuned to NDTV Profit.